This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every episode, he drafted 4 defenses this year. Weird. It's Robb Reinhold.
Well, hello, everybody. I will draft even more defenses if I possibly can.
And before we get into today's episode, a couple things. One, please mind the noise on my end as usual. There's 3 things certain in life, Robb. There's death, there's taxes, and that somebody will end up hammering or running a chainsaw or a reenactment of the Peloponnesian War outside my door right as you and I are filming. So, as I've often said in the past month or so, please, if you hear in the background, we apologize. There's really nothing I can do about it at this point. 2, you guys have given us some really great ideas for future show episodes, and you've put them in the YouTube comment section. If you didn't know this podcast also goes to YouTube, so you can go there and go to the comments section and put up any ideas that we haven't done yet. Please make sure we haven't done them yet, or we haven't maybe called them by a different name, because what's happened is I've seen a lot of really great episode ideas, and I forgot to put them in the spreadsheet. And so my fault on that, traders, but if you want to go ahead and put some ideas down for future episodes, if you got any good ones, we would be happy to give them a run, because we will talk about just about anything, as this episode probably illustrates, Robb. Now, I guess before we do anything, we need to define terms. Now, we have a very global audience, and American football is certainly not the only thing you can play fantasy sports with. You can do that with international football, but we also have some countries to where they just don't do this a whole lot. So I guess for everybody, if you can just maybe in your best terms, define what fantasy football is and how it works.
Well, let me give you my wife's definition of fantasy football. So I've gotten really into it over the last couple of years, and I was explaining it to her and how it all works. And this way she said, "Oh, I get it. It's Dungeons and Dragons for jocks." And at first I'm like, no. I'm like, wait, yes, that's exactly what it is. It's Dungeons and Dragons for jocks. So look, we'll get into it, but basically you play as a fake manager, and your job is to put together a team every single week. And you grab one player from each position, and whatever that player does that weekend, whatever points they get in their matches or their games, whatever, then you get those points. And the manager who can put together the best team that week will win the week. So this is basically fantasy sports where you are the manager picking the players, and then the real life performance of those players will determine how many points you score that week.
And does Maverick Currency still do their league? I did this once, and I did it a long time ago, and I actually took second in my only attempt with Maverick Trading's fantasy league. But I'm already in 2. You know how it is. These are like leagues I've been in for 20, 25 years, and you just can't get rid of those. So I didn't want to overload myself.
We do it every year. We do 2 sporting events every year. We do fantasy football, and then we also do the March Madness tournament, basketball tournament in March. Now, it's always fun to do, but there is a method behind the madness. I advise all of my traders to learn how to play poker. Now, I don't want them playing poker. I don't want to see them at 2 a.m., in some casino ruining their life if that's what they're doing. But what I want you to do is learn the game, because by learning the game, there's so many wonderful rules and psychological things that you can learn that will absolutely help you in trading. Fantasy football is another one where if you do it the right way and you learn the right rules, it will absolutely help you in your trading.
All right. Well, I'm curious to see where this goes. This is a Robb episode. This looks like to be a very data-intense episode. So, Robb, go ahead and kick us off here, metaphorically, and I'll jump in where I can. I do have experience here, so I feel like I'm qualified to be your co-host today. But let it rip.
This episode was inspired by a TikTok video I saw months and months ago before this season started, before the NFL season started, which starts in early September. And I came across a video of a guy. He didn't look like a sports guy, and he wasn't. He worked in an office, and his job was he was the data scientist. He was the person that took all the data that the business collected, And then he said, hey, these are the things that we should do. Now, he worked with a whole bunch of other sports people that were super excited about sports. And every year they invited him to do the fantasy football. And he's like, I hate football. I don't like anything about it. And pretty soon they started bugging him so much that he decided that he was going to join and he was going to beat them and basically shut them all up because he was just going to use data. So I followed his account through the whole year, and sure enough, he won the entire thing. And he not just won it, he obliterated everybody because he was just following the data. He built algorithms. He looked at past events and put together his teams scientifically without any bias whatsoever. And that's where I think learning fantasy football will really help you as a trader, is that you will be looking at it the right way, very, very methodically, very systems oriented.
And I can certainly co-sign on that for a couple reasons. One, I'm going to take it back to sports betting. And we've said this in an episode here on the Trading Psychology podcast, that your actual professional gamblers, the ones who can actually make a living doing it, in the sports betting world especially, they don't know a lot about the actual teams. They might not know hardly anything about the actual teams, but they understand the market. And they pretty much just use that to their advantage. They look at the fluctuations, they take advantage where they can, and that's what they do. Second, it's really interesting you said that, Rob, because in the past 10 years, maybe not even that long, we have seen the advent of daily fantasy sports. If you remember DraftKings and FanDuel, who now do sports betting, that's how they began, because you couldn't have sports betting apps in the United States. And it was really interesting when those came up, Rob, because there were people just in the background who knew nothing about football, running algorithms, entering 20 leagues, and winning like 14 of them. It was so bad to the point where people said, you may as well not even join these leagues unless it's with your buddies, because some guy with an algo is just going to come in and murder you. It's not even worth it. So yes, these games are very beatable, and a lot of times it has nothing to do with the actual sport or game itself.
And let me follow in with that, because it's such a beautiful lead in to where I want to go with this, is that the people that are betting, like I would never go onto DraftKings and for a second think that I had a chance in hell of winning a league in there. Because here's what you're competing against. You have people that are putting together 40 different teams, all with a collection of different players here or there based on, okay, well, if I got this guy in this league and he doesn't do well, then I got this guy in this league that is going to do well, and I'll win one of these leagues. I don't care which one I win. I just want to be a winner in more than one. And so you'll be in these leagues where you're like, oh, I'm picking my guy and I'm picking this guy here. And you're basically playing against bots that are just throwing out a whole bunch of random things. But again, random in the way that they believe that random mix is going to win more than it loses. It's not even fun. Like, I don't even see the joy of it, of trying to actually think you can win money there. As Patrick said, if you want to do it with your buddies, it's great. If you want to bet some money and everyone has a good time, that's a great way to use fantasy football. But I would never go online and actually think I could win the way everything's set up now.
Okay, so we're approaching 10 minutes into the podcast here, and I'm sure there's a few people out there listening saying, oh, okay, I get it. Fantasy football, great, I don't care. How does this apply to trading? So you guys know our methodology by now. We get there. We just do it nice and slowly. But Rob, let's go ahead and start that train moving forward into how what we just got done talking about actually applies to trading and some of the things we can leverage from this.
It all comes down to biases. That's what it all comes down to. Now, I'm using fantasy football as just an analogy of trading because we all bring our biases into trading. So one of the biases we see in fantasy football all the time, and I play in a league, my favorite league I play in, and one guy lives in Houston, Texas. And his team is always guys on the Houston Texans football team. So that's called a home team bias or a confirmation bias, meaning He thinks he knows these players better because they're on his team. And he's studied them and he knows them. And so because he knows them, he is very convinced that these players are going to be better because he knows them. We see that all the time in trading. Let's take an example of Forex. When I have my American traders, and when I break out their trades, I see mostly US dollar pairs. When I like a Canadian traders, I see mostly Canadian dollar trades. When I see my European traders, they predominantly trade the euro. That is wrong. That's absolutely wrong because the trade should be made because of the data, not because you're familiar with the Canadian dollar. And because you live in Canada and you experience what's going on in Canada, you somehow create this illusion that you know the Canadian dollar and how it's going to move. As we've said many, many times in this podcast, you don't know shit. So that confirmation bias is one that we see in fantasy football that you absolutely see in the world of trading.
And I'm so glad you brought this up because I've seen the exact same thing with my traders. Now, you're able to see it a lot more clearly because you have the data right in front of you. I mostly just have anecdotal data from comments and emails and things like that, but this happens everywhere. Let me tell you right now, traders, if you are from the United States, you have zero advantage trading the United States dollar over literally anything else. You are not locked into that currency better than you are other currencies. You're not locked into the USD better than somebody is from Italy. Like it's not true. It's all in your head. And it's so funny because I see people make this mistake. I will bet I fell for this as well. I'm like, well, I have American financial news channels here. It's the currency we all talk about because the United States doesn't care about anybody else. So I feel like I'm locked in better to the United States dollar. What I learned later and what I made sure to emphasize on my channel was never ever get too close to fundamental analysis. It does not help you when you're trading. Flat out doesn't. I've had people saying, hey, do you know any books I can read on pound sterling so I can really get a better feel for it? I'm like, don't read any books on the pound sterling. This is ridiculous. It will not help you trade. People try to go so deep on this stuff, and that's not what trading is. Just like that's not what sports betting is. Your in-depth knowledge of Manchester City or the Philadelphia Eagles does not help you become a plus money bettor. Just like your in-depth knowledge of any currency or gold or Bitcoin or anything, I promise you, does not make you an advantage trader. It just doesn't.
And actually, I'm going to go one step further. It makes you worse.
Yes.
Because you are bringing in your biases. So here's another bias that we see in fantasy football that we also see in trading. Familiarity bias. So last year, I had this great player that scored a whole bunch of points for me. And you know what? I want to get that same player back on my team this year because, hey, they've done good for me in the past. So because they did well for me in the past, I'm very familiar with them and I think I got an edge. We do that all the time in trading. Hey, boy, whenever I trade the euro, I seem to really get it right. But man, every time I touch the yen, I just get killed. So you know what? From here on out, no more yen trades and only euro trades. Patrick, have you seen that one?
Oh yeah, I've seen it in my own trading. Because we get way too emotional over these things. We become euro fanboys when we're really locked in on it and we're winning a lot of trades, and we become yen haters, for example. And it just seems like no matter what we do, every time I trade that fucking yen, it just kills me. I don't know what it is. So the best thing to do would be to just avoid it. Wrong. I told people, I was like, look, I could pretty much show you any chart, and I'll even tell you the time frame, but I'm going to black out the actual currencies. And I bet you couldn't tell me what it was. And you probably trade these charts every day. It's complete nonsensical. Like you said, it is all data driven, and that's all you need to pay attention to. Again, so much of trading is way easier than than people actually think it is, but we ourselves just insist on complicating the shit out of it. I don't get it.
In past episodes, we talked about taking out the trash, taking out the mental trash before every trade. where you're going into the next trade with no history. Somebody wiped your memory clean. You have no idea what even happened in the last trade or what the trade was. That's the right way to go into it. So we see that familiarity bias. Here's another one, and I'm going to open up some wounds here because last year we had just some absolute superstars. Tyreek Hill for the Dolphins, the Miami Dolphins, and then we had Christian McCaffrey for the 49ers. These were the best players, and everyone, they traded up to try to get these guys, and they were the number one picks pretty much across the board. They stunk this year. Now, early on, you knew they stunk. I mean, Christian McCaffrey got hurt, and you knew he was going to be out for 8 weeks. 8 weeks. But you know what people did? They kept him in a roster spot. They didn't move on because they were anchoring the value of Christian McCaffrey. They anchored it as this is what he was worth when I got him. He's still worth that today. We do that on our trading. Hey, dollar yen was at 125 a couple years ago. It's now at 150. It's overvalued. It's got to come down. That's not true at all. What it was worth in the past has really no basis on the value of where it is today. Anything to add on that one, Patrick?
Well, I think you should tell this to people who are thinking about investing in Bitcoin because they're like, well, I was looking at it back when it was 20,000. Now it's at 90,000. Where's the value? What am I really going to get on a return if I buy it now? Well, that has nothing to do with anything. You're just mad and salty because you passed on it back when it was 20. That doesn't mean you should not buy it now. That doesn't mean there's a ton of upside left in this thing. I mean, this could be the future of money and payments and banking and everything for all we know. Well, we don't know. Could be. But there's a lot of fundamentals on its side right now, a lot of tailwinds. And just because it's not at 20,000 anymore doesn't mean it's a bad investment. I hate to break it to you too. It's probably never going to see 20,000 again. So what are you going to do? Just sit there and be salty all the time and be one of these salty no-coiners that gets mad anytime I put out crypto content? Or are you going to say, okay, it's not about where it was, it's about where it is and where it could be and where I think it could be based on the tools I have in front of me. That's it. That's all you have to worry about. You stop getting emotional about what it was in the past. It means nothing.
Absolutely true. And this one really, I think, gets people in investing. I think people have missed a lot of great investments, longer term stuff, because they had this specific value. There's been people waiting for Apple to become valuable for about a decade now, and they've totally missed the boat. So yes, when you look at a trade, where it's been is only relevant in support and resistance on a chart. That's the only way it's relevant. Other than that, the price, the words like value have no place in the world of trading. Just targets, stop outs, that's what we're looking at. All right, let's go to the next thing that people do in their fantasy leagues that also cause them to have some issues. It's called the endowment effect. The endowment effect is basically if you have a player and you've had this player all year long, you tend to overvalue that player, and the idea of releasing that player and choosing someone who is new is actually very scary. It's the same thing as being in a trade that isn't going anywhere. So let's say you enter into a dollar yen trade or a euro yen trade or something like that, and it's not going anywhere. And you have your rules that say if it hasn't gone anywhere for whatever period of time, get out and go into something else. Again, it's all based on your rules. Sometimes it's very difficult to bail out on that trade because you've put in effort. You have put effort into there. You've sat through a couple of days of movement. Just to bail on it and to jump on a new one, that's very, very difficult to do. This is where, again, as traders, we have to look at where is my money going to be best served. If it is not in this position, then it should be into cash. And if you find a position that's better than cash, then that's where it goes. How long you've been in the trade has no basis. Now look, if you have a rule that you're not stopped out by time, you're only stopped out by price, then just follow your rules. Time doesn't matter. But if you have some rules based on time or based on some news that's coming up, then you absolutely do not overvalue this position. You've been in it for a couple days and you've felt the struggle. Guess what? Throw that all away, get into something better.
And this is a really great thing to talk about. It's bumming me out a little bit because just when I thought I covered every single angle there was to cover on my Forex trading videos, I don't know if I've ever talked about this. If you have a trade that's just languishing and not doing anything, at what point do you let it go? Now, for trend traders, in my system especially, usually a news event might come up, and that will give you the signal to go ahead and cut bait if you've been in a trade that hasn't been doing anything for a long time. But that's really interesting because there is absolutely a time to cut bait because the momentum you were hoping to achieve by getting the bull signal or the bear signal clearly isn't there. So you may need to up your liquidity a little bit to put it into something that is moving. It makes perfect sense. I don't have anything else to say on that. I'm just like, damn it. I really should have talked about that at some point. I don't get a whole lot of questions on it, which is good. This is something that isn't coming up a whole lot, but that doesn't mean it won't. Especially, like you said, if you're an options trader, stock trader, things like that, you may go a lot longer without any activity compared to Forex. That's a real thing.
Having a time stop is absolutely, I think, a good idea, but this one needs to have very, very, very clear and concise rules because I can see somebody with a time stop that isn't very quantified, isn't very spelled out, to blow it all the time psychologically. I mean, that's just a psychological time bomb waiting to explode. Like, hey, if it doesn't go anywhere, at some point I'm going to get out. Oh my gosh. Can you imagine having that open-ended of a rule and having any chance at all to not fall into pretty much every psychological trap out there?
I mean, you may as well just be trading by feel at that point if you're going to do that. Why have rules if you're going to have some rules that aren't even rules? They're just completely open-ended like that. Yeah, I will never be an advocate of that type of mentality now.
All right, let's move on to our next problem and mistake that fantasy football traders make, that traders make. We're going to take a look at the hindsight effect. So every week there's going to be a player that just comes out of nowhere and who has scored like 2 or 3 points every single week and then scores 30 points one week. And guess what happens to that player? Everyone is like, oh my gosh, I'm going to get that player because they just had a big game. Okay, this is called the hindsight effect. And we do this all the time with, okay, we have our trade that's progressing slowly. And then what happens is we see dollar yen over here take off. And all of a sudden, our player or our trade isn't very exciting because look at how great this player is over here. So you bail out of that one and you jump into that one because it's exciting and because there's movement there. People do the same thing in fantasy football. They'll dump a reliably good player that doesn't score a ton of points but is consistent. They'll dump that and try to jump on to the hot streak. And then sure enough, the next week, what do? They score 2 points. That's it. So again, the hindsight effect where you're always chasing volatility. In trading, we want to get ahead of volatility. We want to get in before the move and the volatility happens. We don't want to get in after.
Now make sure you're not conflating this with what we just got done talking about. If your trade isn't going anywhere and the momentum you were hoping to achieve just didn't happen for you and it's been, 7, 8 candles, okay, maybe it's time to find something better. I get that. But it's all based on what signals you're getting. Now, if you have a trade, and Rob, I'm sure this was the example you were making here. Like, let's say you've had a trade that's already ran to where you've taken your first profit. And now you're letting it run until your trailing stop or your exit indicator tells you to get out. But like Rob said, it's going really slow. And it's irritating how slow it's going. It might even be stalling out. Meanwhile, you have this other faster horse that's coming out of nowhere, and you want on board to that because that's where the momentum seems to be. I'm telling you, if you could record this and see if it actually works, I will bet you long term it doesn't. I will bet you long term it is a losing proposition. And it's just one of those things. These are, if you haven't figured it out, these are all different ways we try to deviate from our system. And it just never, ever works long term. That's what these episodes are about. That's what this entire podcast is about. We know not to deviate from our system. We know how idiotic it is, but we do it anyway. So that's why we're coming at you with maybe a different set of metaphors that might make more sense. Metaphors you're more familiar with and you can latch onto, possibly, that will better help you remember to stay out of these traps that we're talking about.
Trading rules are simply designed to keep you out of the psychological pitfalls. So we talked about a time stop. If you are a trader and you don't have a time stop, meaning that you don't have predetermined rules before you got into the trade when you'll take a trade-off based on time, not on price, then you are in that trade until price is met, period. But lots of times, flashy lights happen in other parts of the market that makes us look at our trade that's a slug that's moving so slow, and we say, but I want to be over here. That's not following your rules. Now, if you want to have a time stop, then set a time stop and you follow it every single time. If I'm not either stopped out or hit the take profit within 10 daily candles, I'm out. Fine. And do that every single time. But again, this happens all the time. Without rules, you're just going to fall into these traps.
And a lot of times these pairs move up or down a lot based on A, nothing, or B, some news event that came out, but you don't know how significant that news event really is. And I can guarantee you, the people on the other side of the trade, the big banks, they already have this all planned out. They're either going to let this run or they're only going to let it run a little bit and wait for people like you to jump in before they go ahead and dump on you. It never fails. Remember, they're the ones who control these things, not us. So stick to the things you can control.
And the last fantasy football mistake I want to talk about is basically overtrading. Overtrading, and in fantasy football, you have a lot of people that basically put together a whole brand new team every single week. And they're always chasing that last hot player. And again, they are behind. And they're also not allowing for them to just have an off week or to have a beat. Because they think, I could win every single week and I should win every single week. If you go into fantasy football with the belief that, number one, I am going to win every single week, and number two, I believe I can win every single week, you are just setting yourself up for psychological problems. And what you're going to do is you are going to overtrade, because once you get in a hole, you're going to say, I need to get out of this hole. I just had a loss. I got to totally redo everything. I got to totally change everything. I've got to throw away my system. You are going to have bad weeks. You are going to have weeks that your players that you selected based on data alone just do not do well. That doesn't mean you should throw your system away. You have to allow for off weeks. Now, Patrick, the leagues I play in are either a 16-week league or a 17-week league. In my experience, probably the winning team is probably something like 12-6 or maybe 13-4. Is that about what you've seen that the best team out there is?
Yeah, because even if you get a super player, they're not super every week. And a lot of times they're carrying your entire team. And so as they go, you go. And that's bound to happen in the NFL at least 3-4 times a year. So even at the very top end, I can't remember the last time I saw 15-1 or anything like that. That's just not how it pans out.
So when you start the season out, you need to have the right mindset that you're going to put the best team on the field based on the data every single week. Some weeks you're going to have losses. You're going to learn what you can from the losses, but you're not going to deviate from your data-driven method. And your belief is that over the season, you are going to be in the top 1 or 2 spots. Or again, in my league, you have to get in the top 4 spots to go into the playoffs to where you have a chance to win the actual championship. It doesn't even matter if I'm first. If I'm fourth and I get into that championship, I have a chance to win the whole thing. So I have to be in the top 4. That's all I care about. I don't care about being the number 1 because I know that's going to be difficult. And in fact, a lot of times you see that number 1 gets there with having some star players. They end up getting injured. They didn't develop anything else behind those players, and then they lose horribly in the playoffs because they coasted. They weren't constantly adding to their team based on the data. So you just have to allow for those off weeks. Yes, I know we all want to be the number 1 best trader in the world. I love that attitude, but it's hurting you. You want to have positive results over time. If you go into trading with that goal, you're going to make a lot less of the psychological mistakes that people make.
And so, like I said before, we're not the overall subject matter of what we're talking about here is nothing new. We just hope that with episodes like this, because it's a very male-dominated field, this is a very male-dominated podcast audience. We hope we can find things to where maybe we can put out some metaphors that you can more easily recall when you're in the depths of trading. And so if we were able to do that for a small handful of you, I'm really glad we did this episode, Rob. So on behalf of Robb Reinhold and myself, thank you for joining us here on the Trading Psychology Podcast. We will both see you next time.
Goodbye, everybody.